where I share my 44 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, I've been telling you this is going to be a focus on stocks every Tuesday. And tonight I'm going to be covering the AI stocks. I'm going to do a brief breakdown of a ETF. So we're going to do a bit of ETF hacking. So I'll be using our software that we use for our institutional accounts, and a lot of individuals are using this software as well. But the goal of this is to show you how you can reconstruct and build your own ETFs. But we'll also do some deep analysis. If there's time left, then what I'll do is we'll go off of the chat and see if there's some stocks you want me to look at. So wait till I ask for those things. Let's get into tonight's video. Okay, folks, before getting into tonight's video, let's talk a little bit about what happened in the markets today. This entire show is going to be focused on individual stocks, specifically on mostly AI stocks, a couple other things that I ran into. We're going to do an ETF hack, as I mentioned in the opening. So here's the deal. Today, every time you think the market's going to pause, go in sideways, we just continue to catch this bid. And this bid is unyielding to anybody, and including even the Bitcoin is continuing to run as well. And we're seeing really just a frenzy. Whether it's a bubble, we're going to just top out and fall off the ceiling, and the roof is going to fall in. We'll see what happens there, but it doesn't look like that's the case. And I've been promoting, as you know, that I think we're going to see a lot of forward-looking ideas when we come into all the way into July, maybe even October. This rally is likely to continue. I went through the database and talked about it in detail in the Substack account, and my daily analysis, if you don't already know, is on my Substack. And so you go to kendallreport.substack.com, or you can go to kendallreport.com/newsletter, and you can sign up. There's a free version every night. The premium content's $8 a month. So, but I covered a lot of this with what's going on with the database, and we did see a little backing up of the database yesterday, but more of a rotation on a short-term level. So just want to mention, I'm not going to do any deep analysis. I'll be doing that on the Substack, but I do want to just mention some things that happened today. We obviously saw CPI come out, and these numbers year over year was pretty much in line. We saw the 0.4. I thought we might get a slight downtick to 0.3, but no one cared. I mean, we were pushing the RXT levels on the S&P today. So we're just, like I said, we're just seeing this continuation of this bid. So here's my goals for tonight, and I'm hoping we're going to go through a couple different steps. And the steps are going to be, I'm going to reveal this ETF that I'm looking at. We're going to look at the constituent list, and then we're going to go through some charts and look at different elements there. But before we do all of that, I'm actually going to bring in, and we're going to build a portfolio. Now, I pre-built one, and I'm going to bring up our portfolio expert channel and our expert software. And the reason why I'm doing this, because I think there's a big difference. Most everybody that is on the internet is talking about what I normally do, which is speculating in indexes and which way the market's going and all this stuff. There is a big difference between speculating and managing your money. And the software that I built literally back in 1998 has been in service for a long time. A lot of you are already using this. So there's going to be a series of events. I'm going to try to carry this through every Tuesday. So the channel's going to pivot a little bit away from some of the mainstream ideas and things, but I think you'll find this really interesting. So let's go ahead, and I'm going to bring you into a couple things that I think are going to be interesting. Let's go ahead and take a look here. So I've got a chart up here right now, and it is the Global X Robot. There's a robot and AI ETF. Only about 15 stocks. It kind of picked it because it was kind of some low-hanging fruit. And we'll go through the stocks on here, so we'll get into the stock analysis, why I show you this. But this is interesting because you would think because it was AI and related that you would see some big returns, and had good returns last year. And I'm going to show you what I built in WaveTech and what I actually am doing, what it's suggesting right now. We'll go through all this stuff. So the breakdown of this is going to come over, and we're going to look over here, and there's a website called Betafy. So just hang with me because we'll be into stock analysis here very quickly. But this is the symbols and the constituent list for this BOTZ. And what we're likely to see as we go through here, there's some symbols that are not listed here in the US, so I didn't use them. But I think it's sort of interesting because what I'm going to show you is exactly what I've told people forever on this, is that the ETFs, the folks that run these things, the folks that run these ETFs, they have an opinion. So as you would expect, NVIDIA is going to be on top of the list. I think they've got, I'm going to show you all the breakdown here in a minute. You can actually see it right now. NVIDIA 22.1% bet. And then this also does robotics as well in here. But you can look at the weightings, and all the ETFs that you have out there are very heavily weighted. And they're also, I didn't look at the fee cost, internal fees, but this is the reason why I teach people how to break down and how to produce basically your own ETFs with no cost. The beauty of the world we live in now is there's no ticket cost and there's fractional trading, so you can run a lot of portfolios where you don't have to have a ton of money to be able to do this. So these stocks, we're going to go through some of these stocks here and take a look at them from a technical standpoint. I'll review NVIDIA, which everybody is interested in, but I'll go through all these things. But I want to show you this concept first of what happens in these ETFs. So this is a typical weighting of how the portfolio is weighted as you're looking at it. And so when I go over to the version of that I built earlier, so I've got here the bots rebuild, and I'll show you a couple contrasts here, and then we'll go through and look at the individual stocks, and then we'll come back after I go through a couple items here. So we look at this portfolio. It acts pretty much like the ETF. It's weighted a little bit different, but when you look at the weightings here, what we're seeing is that the biggest stock being weighted here, NVIDIA is right here at 14%, so it's not at 22. And then you'll see the this AIC3 is at 6%, but look at the percent profit on this, 170%. NVIDIA, at least on this last trade, is pushing 55%. There were some previous trades, but I want to show you the contrast here, and I'm going to bring up this list that breaks down the entire list here, and I'm going to try to make this big enough so you can see it. That's my goal. But if we find this stock here, they've only got this stock weighted at 1.26, and our system has overweighted this thing 5-6 times more. And this is the exact thing that happens when you're going through this stuff, because the whole pattern that sets up is that there's a lot of good stocks at the bottom end of these ETFs. And this is, I think, a really important thing to look at. So this stuff might seem a little boring at the moment, so just hang with me, because we're going to go through this list of stocks and take a look at the things that I built. And then when we're done, depending on what time we get, I'll go through and I'll rebuild this thing yet again on our more sophisticated Portfolio Expert platform. And this will give you kind of a contrast to managing money. The other element, just bouncing around on this, and I'll just mention the numbers right now. Last year, that ETF did, just got the number, 38.78% return. It's basically flat up about 1% and change. And the rebuild is also up about the same, as about a half, 3/4%. I'm going off memory here. But the last year, to give you an example, the WaveTech version actually did 63.86%, was double that. And this is because of the difference in weightings. And the whole point when we built this portfolio manager was trying to figure out how to actually allocate money to these biggest gainers, and we do a complete different allocation process. And this is even though it's down about half of the returns this year, the point of this is that last year it doubled. This fund hasn't been around for very long, and that's what makes it even more interesting. I like some of these stocks. I didn't get a chance to do a full breakdown, so when I go through an ETF and I start to hack it, we'll dig into capitalizations, a whole bunch of other metrics and things there that are going to help us to identify the stocks. And sometimes we just go through, and not sometimes, but all the time, especially on ETFs that have many more stocks. This one, like I said, only has, I think, total of 15, and I ended up with 11 on this version. And the interesting part, some of these will have 50, 60, or 100 symbols within the ETF. So those are actually more fun to break down and actually cherry pick out of our system metrics. So we show you exactly which ones work the best, and it really breaks down where we have a configuration or a predictive and percentage win on every symbol. So we have a complete metrics that you pull up and research. You can start to break down to see how the modeling works, not how good the stock is. We spend so much time on the fundamental side of trying to figure out which stock is good and all of that. You go through, I ran across another Tesla guy, he's barking behind Kathy Wood saying, Tesla's going to go to 1,500 and all this stuff. Who knows? Maybe it does, but it's not very, very likely. And it's really just trying to hype and trying to figure out that what the stock's going to do. This guy was talking about it going to 1,500, and he told you it was going to 400, but he didn't tell you that it was going back to 132. So it was going to drop 60% in value back at the lows. So what we're looking at here is we'd rather be out of these stocks and rotate the list. That's why a larger list, if you're using WaveTech, this is going to be a useful video for you, is that we typically suggest you have 15 to about 25 stocks in your portfolio, and you manage it based upon how much it's telling you to buy and sell. So our portfolio manager is reweighting these stocks all the time. And we don't care, we don't have an opinion on who should be the heaviest weighted. The biggest performer, the lead dog, gets the win, okay? And it's a much different approach than trying to weight like every ETF does. We could bring up hundreds of these things. The database I was just on is Vetify. They have all the constituent lists of every ETF. So you can break it down and see exactly what's going on. And they all look the same. Top 10 if it's a large ETF, maybe top 15, especially the managed ones, they're going to be most of the weighting, anywhere from 40 to 60% of the fund is going to be in those top 10 or 15 stocks. And I keep arguing, and I've just showed you on this one today, is one of the best stocks was down at the bottom 50% of the list. It was just what I talk about when you get into a lot of lists. You put if you're a big fund manager, you have different issues, okay? You have to be able to absorb. This is, I think, look at my notes here, 2.63 billion in this fund, right? So when you have that kind of money, you have to have thick stocks or a lot of liquidity to be able to manage and bring the inflows and be able to manage the fund. You and I don't have that problem. You know, we don't have where we're going to get so big that we affect the markets, and we don't have to absorb all these things. So we can make different bets, different types of strategies that work way better than these typical managers, because I've been working with portfolio managers in some form or another going back to 1998, so better part 24, 26 years. And I've seen this over and over. I've been teaching this methodology for a very long time. And what you end up with is a much different construction. The portfolios also, every one of these we build, have the ability which to go to zero invested. If all the stocks crumble in front of your eyes, it'll just go to cash. So we have cash protection, and then we also have the participation, and we're going to allow those big stocks that want to run to continue to run, and there's some rebalancing. I'm not going to go into the details, but I want you to understand the basic thing. I start off every night saying, I show you how to manage your portfolios and protect your wealth. I'm now getting into that. I told you folks when I pivoted the channel that there was going to be education and those type of things. So I'm in 17 minutes. So let's go to the next phase. We're going to go through the individual stocks. We're going to come back and just kind of tie it together. And then after that, if there's time left, we'll try to keep this to an hour today. If there's time left, then what we'll do is maybe take some stocks from the field, but don't put them in the timeline because I'll never find them. Just wait, I'll tell you when we get there. Okay, so all right, let's go back and I'll take a look at the charts here. So this is the ETF here. There's something else I'll show you is when we come back, we can actually trade the ETF. So that can enhance them as well. If you just put them in our system and let it trade the ETF, that'll enhance it a bit, because then when the big downfalls happen, you would just be out of it. So you wouldn't have that. It helped save you from Kathy, okay? Probably the biggest destroyer of capital that's ever been created. I know some people will think I'm being harsh, but it's really, even though if you, sorry about that, bumped the button. Even if you go back to the beginning, well, the returns look good. If you look at the peak to valleys, it's pretty ugly. So let's go through these stocks. So what I'm going to have to do is pull these over to the other screen so I can see them. So we'll start off with NVIDIA, okay? And we'll do a bit of analysis here. This is interesting because I just happen to have it set here. This is a 365-day chart, so a one-year chart on NVIDIA. I'm not sure, it says 365. Doesn't look like that's what we got here. So let's go to a weekly chart. And this is the parabolic move that we've seen. Last week we traded above the RTX, but if you look at the slope here, still very positive. The PPMs are actually starting to peel off a little bit and see that the momentum is going to slow down, but it's still so crazy, such crazy numbers. Right now, PPM1 is at 6.2, PPM2, 4.2. These are just crazy trend numbers. You can see it's parabolic, and we are seeing this roll over. I think what we end up doing is seeing market grid turn sideways and we start to consolidate. So this is not a point where you're going to want to enter into NVIDIA. If you weren't in this thing, I'll show you some of the signals. I think we bought off of this base right here on the intermediate. We bought right in where my crosshairs is right now. But this vertical move, we are going to see, I think, a large consolidation. So whether it's a lot of folks arguing it's a bubble, I don't think it is. I think what we're going to see is consolidation. And you could basically argue that from an Elliott standpoint, I'm not going to put the wave count up there, but we had a 1, 2, 1, 2, and this is wave 3, and then there's a big consolidation. And the fact that the 1, 2, 1, 2 is about a year and a half long, you're probably going to see a consolidation once we get to peak values of this on this run. You're going to see the market just go sideways and chop, which is going to set up a crazy good trading because you're going to end up with a trading range. So this is going to end up being one of the best trading stocks yet. All the volume in the world, all the hype, everything around it, that's going to drive that forward. So let's go over to the next stock, which is S. So I'm going to peel through this. I'll get going faster. I want to spend more time here. So yeah, this is very interesting. And I'm just going to tie this together. When you're doing an ETF hack, the algos are suggesting that we're very close to at least consolidation. I've set this up many times. There's a rising 10-period moving average up into the market grid. The 21 is rising sharply as well. Typically what will happen is the market will trade down into this 350, we'll kind of round it off, 350 to the 385 level. So we'll probably trade down into this level here, consolidate, and it looks like that's going to get us way into May. So how we trade here over the next week or two will suggest. So as far as we'll go back and look at the list, most likely a lot of these trades that are in the portfolio long are actually closer to an exit. So NVIDIA is a no-go. It's going to end up be a trading stock. Maybe you can do covered rights if you own the stock. You can sell some options against some calls against it. Maybe even buy some puts. Maybe do some spreads around the ranges on that. But this one is also the same kind of scenario. Good point, Fennell. Will this hack be placed among? Yeah, I definitely can put it in there on the subscription models. Yeah, I'm actually going to clean up. There's a lot of junk in there that Jason built. Not that it was junk because he built it. Just that whole area needs to be updated for sure. So this is so the next stock we'll look at. ABBN. So as you would suspect, a lot of these stocks are getting fairly frothy. I think we've already set the tone here we've got probably everything's starting to point into mid-April as far as these tops come out. So if you own any stocks, these are good covered rights. These are maybe some puts to put underneath the market. Maybe try to do some credit spreads. There's a lot of things you can do option wise that would make sense. You continue to hold the stock and wrap it, in a collar or something. So there's lots of things if you're into options that will be out there. So, but this, so we're going to see that we're come back into this 21 period moving average. So the support right now, 39, looking at around 42 handle is where we're likely to go. But we are looking at a peak. Probably this is the second week of March, probably looking at the end of March, maybe into first week of April. Yeah, I see Floyd's Garage. Yeah, I think that's a possible 1-2-1-2 on there. And then a 3, and then there's a 4, and yet one more little rally. So let's go to the next stock here. Just kind of, I want to get down this list. Next one that's listed is UiPath, so PATH. Some of these stocks are kind of interesting, I think. They're down in the basement, right? And they've got 4.6% in this dog on this ETF. So they've got a bunch of money in there, but maybe it's okay. I'm not sure when this trade went on, but at least you have some fib targets on the upside, looking for a move up to 40. We're currently trading around 24, so that's almost a double. That would be nice. Don't have enough data on this to get the algos to kick in, but it does look like at least we got some solid fib targets. This is a big base. I don't know much about these companies. I'm not claiming that I know some of the fundamentals on this thing. Next one, like I said, we're going to go through this and we're going to come back. And then I just want to get through this. What time we got? 27 minutes in. So I just want to keep track of what we got going here. Here's another one that's retraced. I'm going to flop back over, see if I can get over. I just want to see something here. I want to see if we currently own DT. We do not. So that's interesting, and this is another example on why this is. They're still holding this. They have 3.69%, and depending on where they put it on, they just gave back everything they had. I'm not sure where. I didn't look to see where we sold it, but we got out of these trades, and this is why when I'm talking about this dynamics of these portfolios, when I'm talking about them, those are the kind of little things that you add value. So you miss out on, you lock in a profit, you wait for it to come down, you come back in. There's a number of things. Like I said, I'm not going to be able to get through a full presentation, but Tuesdays we're going to start going through this. I'll try to come back hopefully right where we left off next Tuesday, and try to continue this little saga. Because ultimately, if somebody said once, Bob, teach us how to fish, this is teaching you how to fish. And I actually built all of the software, the WaveTech and the Portfolio Expert, was to eliminate emotions and to be able to more methodically run money from the standpoint of being able to allocate them out in different increments, evaluate the stocks real time based on their technical and quantitative view of what was going on, versus you and me sitting there going, gee, I still like the stock though. Like this is a problem with most Tesla people. I think they make a great car. Well, great cars and profits don't mean much. I don't know if you're watching Tesla, it just can't seem to, it got a little bit of a reversal, it just can't follow through. It's still got some issues there. But the point is that that, you know, people look at revenues, look at metrics like that, and they think that means the stock's going to go up. And certainly revenues have went up at Tesla, but they cut prices 4 times. I don't want to get on trolling Tesla. We're not covering that. But the point is when these stocks start to get hammered down like this, you should own them. That's the point. And especially when if you're being a portfolio manager, this is even more important, because you want to be able to incrementally change these configurations over time. And it's sort of almost like a rotation from strong to weak. It's not a relative strength, but when the technicals roll over, we start to get these sell signals. We take profits, we put the cash in, and now guess what? We calculate the cash returns. Cash is actually a position. I argued, if you knew me 25 years ago, I kept telling everybody cash is a position, because short-term interest rates were, you know, always around where they are right now, around 4 to 6%. And if you're getting that kind of returns on your money just sitting around drinking coffee, that's a good deal. And that's where we're back into that market again. This makes portfolio management so easy, because cash is a position, but cash does something else. It neutralizes the beta of the portfolio. And what that does is eliminates relative volatility risk. Now, like I said, portfolio management is a completely different gig than trying to figure out what the S&P is going to do tomorrow. I love that stuff, okay? I love day trading. I love all that, okay? But when you start managing money, especially those of you that may be watching that manage other people's money, you've really got to have your stuff together to make sure all these elements are going. So let's go back to the stock analysis I want to get through here. And let's see here. This was Dynatrace. Let's go to CGNX, Cognate. Getting the right page. Here's another one. These are all weekly charts we're looking at. This is another one that's kind of in the basement, drifting lower. Now, once again, I don't know when they pulled the trigger on this one, but they got 2.6% bet. And that's typically in a portfolio that has around 20 plus symbols. This is about the allocation level you get. They've got 15. This is still pretty heavily weighted, and you can see really, if they've had this on for a while, this is one of those takeaways. Otherwise, when you're looking at, if you put this up and you're looking at a portfolio, there's stocks that are negative, there's stocks that are positive. If you can start incrementally taking away some of the elements here, you end up doing a pretty good job. So let's get through a couple more of these stocks, because there's not that many. We'll probably do, we'll do 2 more. Not sure what this one's about, but maybe it's something in the robotics, but we'll take, it's literally Auto, which is Auto Store Holdings, Auto Trader. That's doing pretty good. And I don't know what that has to do with AI or robotics. Maybe somebody can help me out here. So anyway, this is really start to go into some kind of consolidation. Let's go down to the next one. I just TECN, TCAN Group. Yeah, so a lot of these stocks still have potential upside. If we went out longer, this is a weekly chart. If we triggered this out to a monthly, this is actually was a good move here. Because now if we start to look at the longer term expectation, then we do have projections for this stock to go up and at least probably test these old highs here at 43. We're probably looking at support around 347, and we're trading on a monthly basis, and it's only the second week of the month. We're printing up at the RXT level monthly. So, But these are interesting stocks from, just trying to get this zeroed in. We also have some fib targets on the weekly chart as well, and the 200-week moving average is right there. There's some resistance right at that level. And just to kind of tie this together, because it's kind of portfolio 101 building, understanding those type of metrics. And it's also, I'll just bring in something here real quick, is it's also, when you see, those of you have the indicators, when you see a 200, if you look at the bottom here, the 200 is rolling over and starting to accelerate down, or suggesting from the algos are suggesting that that's going to happen. And what that does, it puts a ceiling on that stock right at that 200-week moving average. And that's the power of having the PPMs and understanding that that price pressure momentum is actually creating a ceiling. So once again, if you're a holder of this stock, or if you're a portfolio manager, there's a whole nother level you can do, because now maybe you write calls against this, or maybe you buy some puts that are fairly close that don't cost much that will give you downside protection. But the reality is, a lot of times, usually selling options is calls are the best action, because what that does is actually gives you some income and does protect a little bit, I'll get the right word. And what you'll end up with when you're protecting those assets like that, if the stock goes down, then you'll probably end up collecting all the money, and you might even roll the calls down if there's some pretty good momentum. And the beauty of having what I've tried to do a really good job, folks, of getting a lot of tools in your hands. I'm not sure I've done a very good job at showing you how to use them all. That's going to change going forward. And I want to show you how you can take the indicators, see this kind of set up, and then watch for sell signals on the wave tech, and then you're going to be able to guide everything together. I'm not sure how I'm going to deliver this video, but I'm actually going to show you how to pick up the signals from wave tech and then validate them on the indicators. I've been babbling about this behind the scenes for weeks on end. So what I want to do is say, okay, let's reverse engineer a buy signal. Let's reverse engineer a sell signal. And then ask other questions, like was the algos telling us that we were going to buy this 1 week, 2 weeks, or sooner, and get a head start on some of those symbols? That might be a possibility. So I want to start really breaking down how to combine these products, because the wave tech indicators are all built into the software you're looking at. There's 600 variables in the decision process on WaveTech and Portfolio Expert, and about 60 rules. So there's a lot of things going on. They're probably getting very close to running these portfolios every night. I think I calculate with the current number of symbols, we're doing about 10 million calculations every day and updating those. And all it's doing is asking all the questions on every symbol. Are all the conditions right for me to continue to hold it if I'm long? And if I'm not long, is there any conditions show I should be looking to buy this thing? And then you can do, there's so many things you can do by combining the indicators and the portfolio process. And that's why I decided when I restructured the channel that Tuesdays was going to be about individual stocks, and then portfolio management, start bringing in some concepts. Because if I could do anything for the community is to show you folks how to manage these portfolios, it would be absolutely huge for you, especially 401ks, different types of, all the money's important. But managing your own 401k, I know we've got quite a few people that are doing that. I want to actually expand upon the knowledge base, and so that you feel like you're making good decisions around the technology itself. And I will just give you, we are working on rebuilding WaveTech. So it's just, it's just a matter of time. We're actually interviewing different firms right now. So there's going to be nice modern feel and a lot of new functionality. We're working with ChatGPT and API to actually help manage and make a lot of decisions and review portfolios for things that I've already tested a lot of these techniques, by the way. So we've always said about you got to watch for certain elements. So when stocks get overdone, we're going to be able to compare it to the expected holding period. I show you folks that map versus where we are, and we're going to be able to use AI to tie into things, and hopefully we get the algos in there and a whole bit. So it's like my big effort going. I've been classifying this as my next big thing I'm going to do. So let's see where we are. We are at 40. We got 20 minutes. All right. I would like to, let's do it now. Give me a few stocks and I'll do some reviews for you folks. And then we'll circle back to the finish off. It's like 10 minutes. So go. You know what they say, early bird gets the worm. So showbiz, you're on. Yeah, so we'll stick with weekly analysis. This thing looks like it's locked. Another one of those things I was just talking about, which was that 200-week moving average. And by the way, let's just see here. Yeah, showbiz, if you have the indicators, then you can see we still have a rising 200 here. But what we're, I'm going to blow this indicator up on the bottom just so we can see. It looks like we're a few weeks out from it probably stalling. So right where you're trading right now, somewhat of a ceiling. Positive thing is if it breaks through, we have some Fibonacci targets on the upside. They are 2274, 2732, and 3017. So let's, yeah, we kind of got to do snow, right? That probably should have been on there. Maybe even Palantir should probably be a stock we look at. So good old snowflake. Not a pretty scene. I think the reason, I'm going to try a setting here real quick. I think the reason, I never can figure out TradingView. They have some strange things going. Okay, so I got the algos to work. It looks like there's probably some more downside. We're trading down below all the averages, so you're kind of in no man's land. No Fibonacci targets. I'm going to go to this and just change all these so we can see this on some of these stocks. Bear with me just a second while I change a couple settings. I did something to my PPM 200. So sorry folks, let me just clean this up, okay? I'm not sure what I did to my settings here. Like I said, oh, I see. It's not able to generate it, so that's the reason. I thought it was a setting I did. So there's not enough data on this to do a 200-week calculation. All right, I'm going to go down the list best I can. I'm going to do DIS. There's a pattern. I want to talk to you folks about this real quick. And this is education for the indicators, right? I've been telling folks what you want to watch is the WTRs. These are the white lines that are being predicted. When you start to see the algos projecting numbers above that 200, it typically will lead down that trail to testing the 200. And right now, that value, let me just bring up some of these values so you'll know what it is. That's at 126. Stock last trade is 112. So it does look like it's trying to forecast that up, but you have to validate this two ways. Is you have to validate by making sure that the algos and that the momentum or the PPM price pressure momentum is pointing to the upside. In this case, it's kind of flattening out. I saw the Kathy Wood comment. I'm sorry. I had to look at that. So let's keep going down this list here. This is another tough ride, right? So I got to come over here and just put something in here. I just wanted to bring up, yeah, look at this thing just plummeted, huh? There's just no way getting out of the way of this thing. Yeah, that's a huge gap. Whenever you see this type of action in a stock, the weekly bar, let's go to daily because then you'll see the gap. Yeah, you look at that thing gapped right to the 200. So they caught everybody flat-footed for sure. And that's pretty ugly. So even if you held this thing going way back, you just gave it all back. And stocks are way more volatile than, yeah, you might say. So yeah, there's, we might be able to take a look at, let's see if we can go back and see if this event could. Yeah, so this is this hourly graph on that on Palo Alto. So yeah, I don't know. It's kind of hard to see here in hindsight. We could do a run back, but that's just a gotcha trade. There's no way around that. So yeah, that's pretty brutal. Hope you didn't own it. It's probably a good buy off that 200, but it's a trade more than anything. It takes a while when you get that type of stock chart gets completely. Yeah, I went through AI a little bit ago, so maybe you just joined. But the yeah, we're looking at. I'm just now getting random here. I got about a minute and a half, so. This is weekly at Etsy. I never got that site. Remember back in 21? Remember the good old days? Yeah, it'd be interesting to bring this up in WaveTech just to see what's there. But yes, so this still looks like it's one of these where we got fib targets up, fib targets down. It's a coin flip. Looks like maybe a little more upside, upslope here. So let's do this. See if I can get this to, yeah, just not a pretty chart. This is not a pretty chart. I'm not sure if you own it here, maybe you got a little upside here for a couple of weeks, maybe print to this fib targets here, which is target one's $97. So kind of tough one. So I just bounced down the list here. Here's EME. That's a rocket ship. So we got well, if Etsy requires low interest rates, they're probably in trouble for a very long time. Certainly not 1 or 2% low. If that's what they require, they need to fix that business model. So this stock has went vertical. We are seeing similar to some of the things we looked at in the NVIDIAs of the world. We're just looking at this thing ultimately consolidating, probably staying, I'm going to say it'd probably be between 296, 350 randomly. So this would be, if you own it, there's options to write against it. That's probably a pretty good thing to do. Yeah, actually, I'm going to do this last stock here. So CrowdStrike, when you see this kind of bar, like what we got here, I've been talking to you folks about these volatility spikes. When we got just, this is when they came out and they blew out the earnings. This thing just went vertical, and then the same day we got this big reversal. Let's go to daily. Here it is. So it gapped higher. I'll bring this in. So it gapped higher last Wednesday, just closed down. It's almost like one of those flushes you see, like I trade indexes, and when you're trading E-minis, all of a sudden you get a big flush. It'll just rally like a ridiculous amount, and then it just halts, and then there's no buyers, and it just goes back down. And that's usually a climactic type move when you see those, especially if you're watching the action and it happens very fast. And this was the case here because we got the open way up here at, let's see, what's the open? 360, and it closed at 330, and then we've just been sideways. So now it's trying to set up maybe some sort of upside here. We've got the targets of 345, 367, and 340. Okay, folks, so I'll come back on screen here for a minute, and what I think we'll do, we've got just a few minutes left. I want to go back to the talk about the ETF hacking to kind of complete. This is really what this show is about. I hope you enjoyed this because this is really what it's about here, folks. If you're going to handle your own money, and I know a lot of folks that I meet are in that position. Even they've retired, they want to manage their 401k. If that's what you're looking to do, you have to get into using some kind of tool that's going to help you to manage the ins and outs and do these little incremental changes. If you just try to buy a set of stocks, you end up looking like these ETF guys. I'm telling you, I would put 80% of most of the ETF folks on an amateur level that build these things, because they build them with the same type of metrics. And like I told you early on, all of these things are heavily weighted at the top. The manager's making big bets. They made a big bet on NVIDIA, but we could see that AI company was that somebody just asked for. What was it? I just saw it up on the timeline here. I'm just looking here. But that AI company, AI3, whatever, that was, they've got that thing weighted at 1.26. We've got it weighted in our strategy at 6%, 6.5% actually. So we've got it way, way overweighted. And we still have NVIDIA like at 14%. So it's still got a lot of weight. But that, a lot of times, like I said, the bottom end of these ETFs, there's just jewels down there. I mean, it's just amazing. I've seen this over and over and over again. We've been doing two forms of ETF hacking for decades, is even going through and getting the constituent list from mutual funds. We used to do old school days back in the early 2000s. We did mutual funds. Now that there's so many managed ETFs out there, and especially with this database like Betafy, you can actually get into the point of doing some really breaking these things down and finding what's going on. Now, I tend to think this way. We used to promote, use these big managers to help you find the good stocks. Well, and they do sometimes, okay? They do have some good rotation. But just like I said, some of the best stocks are at the bottom of the list. Let's say in the lower tier of the allocation that's being made. It's like they know they want to own them, but they don't believe in them. And meanwhile, that one stock is, like we're up 175% on that one stock, as we don't have any attitude. So I'm going to put out my very favorite line that I tell everybody, no matter what you're doing: attitudes and opinions keep you in when you should be out and out when you should be in. And that's why you want to have something very quantified from how you choose stocks, how you find them. Doesn't matter if it's an ETF hack. We provide stock screening and a bunch of different tools, so you can find different stocks for different type of metrics. There's a lot of ways to design this stuff. There, in our database, there's roughly about, we'll call it 6,000 to 7,500 actual companies that are out there that are available, that are say small cap plus. Maybe, I don't even know how to define the metrics any longer. So because it changes. We've got companies that are worth multi-trillion dollars, right? So those aren't even large caps. Those are monopolies. And so, that's a lot of that's why I think the best place to look for stocks in 2024 is your mid-cap stocks, and you want to find things with good patterns, got a good story behind them, and more importantly, from my viewpoint, since I believe AI is going to affect so many companies, that I believe that what you really can do is you want to focus on companies that are going to most likely be new to implement these new tools into their business. And we put up CrowdStrike, right? I quote the CEO from CrowdStrike was on Bloomberg one day. I just happened to catch it, and he was talking how they took some of the things they were doing for customers for their security, and they took the job from 8 hours down to 10 minutes. And when you do that, you get the amount of productivity and the change in the business is huge. And I guarantee you, they charge the customer the same thing, even though the 8-hour job was 10 minutes. That's why they blew the earnings out. They've got a whole bunch of that stuff going on. So just know there's other companies that are going to blow up like this, where there's, 3 and 5 baggers, where my old scenario used to be, I want to find the small caps that can turn into large caps, right? So those are 3, 4, 5 baggers to get to that metric. Now there's even bigger numbers out there in that kind of conversion. And small caps, I thought was going to be the play. We've seen that it has not been the play. It continues to be a laggard. There's been some good trades in there, I guarantee you. Not all 2,000 stocks are dogs and zombies, but this, I think the mid-cap area has a much better, healthier tone, access to money. They're not quite as interest rate sensitive as other companies. So go and spend a lot of time looking for those mid-cap stocks. So, okay, folks, this is going to do it for the day. I appreciate everybody watching. Hopefully this wasn't, we don't have the kind of, I guess my talking about portfolio management and stuff is not the most, I guess maybe it's interesting, but this is what I want to do, because I've been telling you folks for 4 years, I'm going to help you manage your portfolios and protect your wealth. that's what we just started into, and there's going to be a lot of things I'm going to start to bring out. And when I finish this ETF hack, I will put it into premieres. So I think Finau or somebody was asking about that. So anyway, folks, have a great day. Tomorrow we'll dive into what's going on. But remember, Substack, kendallreport.substack.com or kendallreport.com/newsletter. Sign up for the newsletter. There's free content every night. I believe there's a 7-day trial. That's where I'm doing all the short-term analysis. And then also, if you don't have the indicators, you can, and I should have done this the last part of this video. No one will ever see it. But if you want to check out WaveTech, it's $3.80 per day. It's prorated. So we're like mid-month, it'll be like 40-some dollars for the rest of the month. You just go to kendallreport.com/wavetech, and then you also can get the indicators going to kendallreport.com/indicators. So anyway, folks, I appreciate everything. Thanks for the patience. We've got just about 6,000 new subscribers. We'll see if we can get another surge. I look forward to working with everybody, and we'll see you tomorrow, same time. Have a great night.